let our panelists introduce themselves, and then we'll talk about investing in blockchain.
Hey guys, my name is Johnson Nakano. I run a fund called Decipher Capital. I have mostly an engineering background, but I've been trading equities and stocks since I was in high school. Bought my first Bitcoin back in 2014, and I quit my full-time job last year at Salesforce to do this full-time, started investing in blockchain. And at Decipher Capital, we're mostly long-term value investors. We invest in anything where we see long-term value, whether that's equity in blockchain companies, security tokens, or utility tokens.
Yeah, hi. Thank you for everyone coming. My name is Shazi. I spent half my life in Asia and half my life here. And I went to Berkeley, studied engineering, and I sold my startup in 2015. And after that, I became an angel investor, and I also joined a Chinese fund, cross-border fund. And now that I'm mostly focused on artificial intelligence and the blockchain.
My name is Rana. My background, spent a lot of years in corporate, Logitech, Kronos, Google. Then I did a private equity turnaround. We took a company that had shrunk from about $500 million in sales to 35 million, at 300 million in debt, negative 100 million EBITDA. Real crappy show. We took it from negative 100 million EBITDA to about plus 12. I exited that in 2014. In 2014, we did a B2B SaaS startup called Ties. Built a deal flow engine and a machine learning system to predict commodity prices. We got exited in December 2016. And since then, I've been largely investing. A lot of early stage, post-seed, pre-A, B2B SaaS focused on healthcare, a lot on AI and analytics and predictive analytics. That's sort of been my current focus so far. Yeah, that's basically it.
And I'm John Ritchie. I mostly deal with non-blockchain startups because I run an angel investor group and I'm a member of other groups. But lately, I've joined an outfit called BlockChain Generation with a friend of mine, Alex Venisev, who's been in this blockchain religion for a few years. I'm a newcomer to the religion. And he did an ICO back in November. The conditions were different, but and Matt Grimm, also an evangelist. We're basically dealing with startups from very, very early to the full SEO, ICO. So I'd like to move on and ask our guests why they think it's a good idea to invest, and specifically to invest in what? Blockchain without coins, blockchain with coins, STOs, ICO, etc.
Yeah, that's a good question. So if we take a step back for a little bit, we're definitely in the bear market. We traced more than 70% since its peak in January. So blood is in the streets right now. I think we're getting really huge discounts. Well, I'm more of a long-term trader. So I see this as a big opportunity to get discounted prices. If we look at the entire cycle as a whole, we have these massive technological waves every 10 to 15 years, and blockchain is just starting. We're still very, very early stage. Even if you look at all the dApps, one of the biggest dApps, CryptoKitties, literally has 300 daily active users. If one of your biggest dApps has 300 active users, you're still very early. When it comes to the other part, in terms of investing in equity in blockchain companies or utility tokens, there's really no binary answer. You really have to do your due diligence, make sure you're not just investing because it has a cool name or something. Actually meet the team, read their white paper, make sure that they're solving an actual problem. And not just for us, we look at problems that are very transformational, not just very tiny incremental. We like to hit the fences. So first, we want to make sure that the problem is huge and that the team can actually execute on that. So it really depends on the right, you know. And one of the things I ask myself is, where is the value being added? Is it in the token or is it in the equity? And do the incentives align? So that is very unique to every single company that you need to assess.
I think it's pretty well said. And then for me, I guess I'll just elaborate on that. I focus on a lot on like, okay, industry-wise and what is now and what is too far out in the future. So I pay attention on infrastructure because I keep getting those pitches like, oh, this is a use case, we're going to do X, Y, Z. And I ask, okay, you break me down, like how you're able to achieve, right? For example, I get a pitch about, I'm going to do a blockchain for Facebook. I was like, how you do a live feed? If I post a picture of a food and I see in the next second, So I actually did an investment on the infrastructure level because I think that needs to come first. And yeah, some use case as well, but interrelated and something like that.
I'd like to say, I mean, we talked about this yesterday as well. I do not invest in blockchain startups. I mean, I invest in startups and some of them happen to use blockchain. I mean, it's akin to saying I invest in TCP/IP startups, right? It's sort of like, it's a technology which is unique in terms of its abilities to solve certain problems that have been either not solved today or have been poorly solved. And as a result, that's where the opportunity is. It's like, you know, if you look at that killer app and you see, okay, this is an amazing implementation for blockchain. A few projects that I feel are amazing. You know, I invested in this company called Shopin, and they're looking to take a consumer profile of an individual and put it on blockchain, and then create a community of profiles that can be leveraged by retailers that participate, and then you can then disrupt gifting and reward management system, and also sort of give these other retailers outside of Amazon a way to compete with Amazon, and so that's disruptive. And there's another project called Token where we're looking to solve for the stablecoin mess. There's a lot of different variants, but it's still a mess, and so it needs to be solved from from inside the system. So we're looking to build a central bank coin, but with the bank support rather than an outside private ledger, sort of a public ledger, decentralized ledger. So I think those are good implementations for blockchain. We did kick off a project called Hackient earlier this year, and that's bringing the best projects and the best developers together. So again, the goal is to, for me as an investor, I mean, I'm looking at, how can we bring this nascent technology to mainstream? Because it's not in mainstream now. It's still very much at the fringes, and it will happen when enterprises move in, right? So that's really interesting. So I'm actually looking at a company, they're still in stealth right now, but what they're looking to do is they're looking to bet on, say, okay, which is the platform that we can bet on. Ethereum is a good bet. Maybe not. Maybe there'll be a better one that will come on. But if you look at Ethereum and the Casper protocol, could we come up with a Cisco-like box that enterprises can bet on from a security perspective, from a scaling perspective, from a latency perspective, that then allows enterprises to use traditional implementations of enterprise software and build that on blockchain. And that would then bring blockchain to mainstream. So, those are the projects that really excite me. And that's big vision, big game, which is how Cisco was born. I mean, when the internet happened, they were like, well, can we package this in a box? Can we package bringing your solution onto internet in a box? And that's how Cisco was born. So they're now looking at, Internet 3.0. So could we do that for blockchain? Rather than just building a mining rig. Not exciting to me, right? I mean, that's more of an opportunistic situation, which, I played in that, but that's not a long game. So for me, I mean, those are the things I look at from a blockchain investment standpoint. There's some really exciting things happening, but also things have shifted from 2016 and 2017. The market's very different right now, and I think the key players will move in. So you have to repeat the question.
Yes, sorry about traffic. I'm late. So Chris Lee, founder of Forge Labs here. Forge Labs is a blockchain accelerator located in San Francisco, Toronto, and China. And we are backing teams in games, social media, e-commerce with the mission of driving the mass adoption of blockchain technology. Thanks.
So we had a couple of questions, so maybe I'll give you an opportunity to talk about those questions, like why should investors invest in blockchain, and what about token sales, pre-sales, ICOs, STOs?
Also, I was listening to Rana speak.
Okay.
Pretty good. Yeah, basically, that's my point. But blockchain technology is a horizontal layer, like internet back in 1999. I think there are a lot of opportunities for many industries. Maybe there are people from finance, from supply chain, or even agriculture, or legal. So I think there are a lot of opportunities for blockchain technology to be applied to those industries. And many industries really need to be renovated with the technology. So, for example, like a legal document. So in the programming language, we have this term called open source. So everybody shares the same kind of standard code or library. So I think in legal industry, maybe those can be open and shared by everybody. Something on blockchain. Yeah.
Okay, thank you. So we investors, we look at these blockchain startups, and sometimes they have equity are being offered, sometimes not. But very often we have to figure out the whole coin business. How do do you invest in pre-sales coins, and if so, why? And if not, why not?
So it really depends on your investment strategy and your investment thesis. There are a lot of ICO focused funds where they get their 30-40% discount. They flip it a year, whatever the lockup is. It's getting longer and longer. I don't do that. I tend to stay away from pre-sale ICOs. Not to say that I don't do it completely. I only do it if I see long-term value. So I'm a really long-term investor in this space, probably a much longer than most other funds. If I don't see myself holding it for at least 2 years, I don't even buy. I want to be able to add value to whatever I invest in, and I don't think just doing these short-term flips is my type of strategy. When it comes to looking at, all right, which one do you invest in? The question I always ask myself is, what is their business model? If your business model is completely dependent on selling your token, then it's better just hold the token because you have a direct access to it. However, if you see a blockchain company being able to generate multiple different business models, maybe it makes more sense to have the equity. So you really have to look at their business model and really study that and to see the future implications of all that.
So I guess I'm not sure, the audience, are you guys mostly investor or founders? So how many people founders? Can you raise your hand? Okay, mostly are. Okay, all right. So I'll just try to make it more useful for you. So I often get asked hey Jazzy, do you want to take equity? This is more attractive, or you want to take the coins? And then so now my question is, okay, as a founder, should you raise money from the traditional VC or raise the money from the crypto hedge fund or VC, whatsoever? So you really need to think about what this investor on board really for. If it's strategic value, I often say I like equity. The reason why, because we actually are a partner and I see a long-term value and working together. And then if you want, but the thing is, for equity investor, often due diligence takes much longer, and it's pretty hard, and then we have a very intense process to writing a check. And if it's coins, it probably will be much faster and more a simple term. And then but in the same time, like my best friend who has 25 projects, she cashed out like no other day. But I'm still holding on to my project and working like I'm actually on board. And so you really think about what do you really want from the VC, and also how you feel when you talk to them, what do you see in the next year or two, how the working relationship is going to be. Yeah.
I think both are applicable, John. I think I've done both. I've done utility, tokens and pre-sale. I've also done a lot of equity participations. But I think it depends on sort of where's the applicability. I mean, if you're building a tech and you're leveraging blockchain as a differentiated advantage to building that tech, but you may not have a utility token. There's not a legit play for a utility token, but you're just trying to sort of squeeze it in somehow just so that you can do an ICO. I mean, you can smell that. I mean, if you've been around, you can see that, and I won't do it. I mean, the play there is that there's enough hype. The CEO is a genius, and they have a lot of marketing dollars, and they can get some exchanges to list them, and then you could cash out. Okay, I mean, fine. I mean, it's not. I mean, you could do it, but it's not necessarily something you can do a lot, and you will get burned with that. But then there are projects where utility token does make sense, and the gameplay around the fact that the value of the utility token will increase as more people get in, and eventually the tokens will be valuable. You could hold on to them or you could sell them, and I think that's definitely something I also believe in. It's a very valid model. So I mean, in terms of comparisons to both, I'd say yeah, both are good. It's not like one is a scam, the other is real. Definitely, raising money. It's a new way of raising money, and if you're raising money simply on a utility token, it's a completely legit play as long as there is actually a utility, and it's not just necessarily built to just do an ICO.
Yes, we did invest in pre-sales, but I think the time of ICO is almost past. So Rana mentioned the utility tokens, but I think many investors got into the ICO because the security token attribute part of that. Because think about Bitcoin, the early Bitcoin holders, they're just enjoying the benefit from the network expansion of Bitcoin. They bought at like $1 and hold it for like 9 years, and now it's like $6,000.
One thing, I mean, based on what you, sorry, I'm okay. Just one thing I want to add is the problem is that most investors, especially if you're not a seasoned and experienced investor, you don't understand the difference between an equity token and a utility token. And that's where the problems lie, because most of the ICOs which happened in 2017 and 2016, because SEC was very vague about it, you don't have to necessarily have the same diligence around equity tokens, but they were marketed as potentially having a stake in the company. And even though there's no ownership, there is no equity, and that's a problem. And I think very legit, very big names, big competent CEOs and big players have done that, and they're now in deep trouble because SE is sort of saying that even though the laws didn't exist before, you should have known better, and that's sort of you didn't measure up to the Howey's test, and a lot of them are getting penalized for that, and they've taken money from people who they shouldn't have taken money from, and they don't measure up, and they're not qualified as investors. And right now that's a problem. And so today what you're seeing is at least the mainstream projects are differentiating that message very carefully. They're saying it's an equity offering, and there is ownership versus there is no equity offering. It's a pure utility offering, and this is how things pan out. So if you clearly define it, it's fine. I mean, let the investors make their choice if they believe in the value of it.
I have a question for the panelists. So I know many projects and many investors are asking for both equity and tokens right now. I think many founders has anybody encountered that situation that investors say, I want equity, but later when you do token sale, I want tokens as well. So do you see any problems with that? Like both equity and tokens?
Actually, I mean, recently it's been an option on the table where I've seen instances where first they wanted equity, and then they have the option to convert to the utility token if they wanted to. I haven't really convince myself that that can actually work. The question, I think the root question that I think about always is, where does the power lie? Does the power really lie on the equity or the token? And that's why I think what I'm excited about coming forward is on-chain governance, because once you have on-chain governance, it allows, because what is equity? It's you have your say, but you also have profit. And if you're able to combine both the governance on the token and equity, and what gets really complicated in the token design mechanism is when you combine all three, when you have governance, equity, and utility. And I have not seen a model that works yet. It would be really interesting to see all of those combined, but I haven't seen a way where both can coexist without some way being attached.
Anyone else? Okay, so we're getting towards the end. We are going to take a few questions, if there are any, from the attendants. We don't have a mic, so if you have a question, speak loud, please. Go ahead.
I don't think you hear me, but my question was, we're talking about investing in blockchain. How are y'all vetting some of the founders of these different blockchain startups and the projects that they're creating? For the simple fact that we know that blockchain can help a lot of industry problems, but we know that can also create a lot of problems. So I'm wondering, what is your internal mechanism for risk management and to make sure that we're not funding projects that are create destruction long term?
So the question is, how do you vet the team and the projects? Is that the question? How do you vet the team and the projects of blockchain projects?
Yeah, so vetting is always interesting. The best thing you want to do is actually talk to them in person. Talk to them in person, seeing what their background is, seeing if they have a unique way of actually executing on the project. You know, how seasoned are their technical team? Were they just a bunch of interns at Google that never shipped full production code? Do they have the talent and the execution to be able to deliver on the project? In terms of hedging, you know, that's one of the risks every investor takes. Every early stage startup has, you're taking on that risk. And depending on the lockup, most investors prefer to stay liquid, but compared to the VC model, where you're looking at 8-10 year lockups, crypto is a lot shorter. And so for me, I'm a long-term investor, so it doesn't really bother me.
Okay, so maybe helpful to explain what is my deal, how it went through the whole process. For us, we back the day we would look at 75 projects a week. And that's a lot. Yeah, those are through either LinkedIn, reach out, referral. Only referral have higher qualities. And so I guess when you're looking to meet a particular VC or stand out, you may want to have sort of an introduction, however. And the second is I often read the white paper first, so I know what you're doing. If you're in the bracket that I'm interested. And then when I read through white paper, I mark a lot of things that I think is a potential red flag, or I want you to clarify it. And if it's interesting enough and fits our thesis, I will invite you back. And this part is interesting. It's more like an in-person meeting. So soon you walk in the door to my office, I actually pay attention. You know, how you interact with your co-founder. You know, how you presenting yourself, and then those are things that I truly care about. Because I felt like I'm investing in you as well. And then so in terms of question of I'll be honest, there's not a single project that I heard is oh, this is the only one. I heard similar ideas and twisted here a little bit, here a little bit. So I asked, well, how you differentiate yourself? What's the defensibilities of your project? And that question, I heard a 30 minutes answer. I also heard 5 seconds answer. It's it mattered to me, and how you able to sell it to me. And then on top of that, of course, I realized a lot of project has very amazing advisor, XYZ, 500 star early. 500, 400, 500 CEO are my advisor, and I ask her, how often you talk to him? 5 minutes for half year. And so now I'm like, okay, are you overselling me, right? So honesty is also very important. I'm trying to find a diamond in the rock, and there are just so many projects. Yeah, and then lastly, I guess just be, I don't know, like come and prepared, understand the VC, you know. Like I had people asking questions, and I feel like they have no idea who we are. So do your homework, and I think that will carry on the conversation.
I think for me, it's not that different from investing in a non-blockchain or a non-ICO. It's the same methodology. I also think it's different for the size of the investment and the stage of the investment. So I do a lot of early stage, but not super early stage. So typically I do pull seed with some, there's some semblance of traction and some semblance of product market fit, but you haven't quite reached the point of inflection yet. That's where I think I can add a lot of value because I'm an entrepreneur myself. So I feel, I can bring in and I can take them from point A to point B. And so I mean, very simply, I look at three things. Is this the model or the game plan to, first off, right? Is this something I could do myself? And if that checks out, the second is really the size of the opportunity. And the third is your ability to execute. And your ability to execute really encompasses, current skills, past skills, previous exits. It's just like, it's pattern recognition, really. You're looking at, what you've done in the past, and do you have the ability to do it? I have rarely. I have, but I haven't really sort of, put in money in companies where the last part is weak. So the last part has to be super strong. Even though I'll probably go into a market opportunity that I think is small and niche, I'd still go for that because I really like the founders and the founding teams and the people behind it. I feel like they're amazing to work with, and it's a long-term play. Because oftentimes the investments I've made and we've had a good result, the founders have gone back to doing newer startups, and then that's a no-brainer because now we know each other very well, and it's fantastic. So I think it's that. I also have toyed a lot with. As an angel, you lose your leverage after the A round because the checks get bigger and everything goes in a different direction. For me, it's more of sort of I do like the private equity model a lot, and so I have a team of people who I've worked with in the past, and they're very well trusted, and they bring a lot of abilities. So when we get involved, it's more of you get that team, and the team actually pays you versus you paying the team. But there's a catch, and the catch is you'd have to listen to what we have to say, and there'll be some pain if you don't. And but the goal is that we're both aligned, and eventually, we're agreed upon where we need to get to, and we get to that point. And so, that's sort of I do like that PE model quite a bit. I've had some PE background in the past with the turnaround I did, and so I've definitely applied that to the startups I do.
All right, thank you. We're going to take one last question and some quick answers. Robert?
What's it going to take to turn the market around again? What's the catalyst that you're looking for to take us from bear and bull?
I can take this.
Repeat the
I think you're
repeat
thinking
the
it
question.
wrong. There's no catalyst. It's that the force is that we need to build in the real technology. We need to deliver the real product to turn it around, not just wait for it to turn it around. But I'm counting on those projects who already raised fundings to build a really easy to use infrastructure for the dApps to build upon.
As for me, we clearly are in a bear market. Who knows how long this is going to take? The big shift is going to be adoption. That's simply it. And I expected this bear market because last year we had sky-high valuations, and there was this huge delta between speculation and actual utility. So once utility catches up, it will get there again. But we definitely needed that bear market for that correction because it was too much hype. And now that the hype is gone, projects can actually put their head down and start working.
Anyone else? Okay. So let's give a hand to our panelists. This time is done. We're going to take a 5-minute break and get ready for the startup presentations. Thank you. Don't go away.